All trading videos by OFA are for educational purposes only to illustrate sample use cases of the software functionality. OFA is not a trading system or strategy being marketed on a performance track record of live or hypothetical results. Trading involves substantial risk. Please do not purchase or subscribe to OFA services without carefully reading the complete required disclaimers and terms and conditions located on the OFA website. In today's lesson, we're going to look at a breakout, or a breakdown would be the opposite. We're going to look at a range here. We have a consolidation range where we've made a high. We've come back to that high, and now we're trading a bit below it. And the interesting thing about this trade is that this is the type of trade where when it is starting, you don't know which direction it's going to go. So when you watch the video on double tops and double bottoms, this is the exact same trade. It's just that if the trade does not work out, then you would be playing it for a breakout. So for example, if this was going to be a double top, we would see the market come back up to this and trade back down off of it. If we trade up to it and it doesn't break down and make a double top, then it's going to break out and make a breakout expansion. So we're going to approach the trade the exact same way, because in reality, we don't know what the market is going to do, right? We're going to be making assumptions about what the market will do. So when we're in these situations where the market could go up and maybe make a double top and then roll over, or could go up and break out, we need to be prepared for either scenario. And so we need one style of trade that we can use for both, so that we're not trying to jump between different trades at different points of the day. So as you can see, this is in the overnight, we make a high. Basically all morning it is flat through the London session, and then U.S. pre-market, we've made these little jumps up, and now we're just getting right into 8 o'clock in the morning, and this is where we're going to see some action. So if I didn't know anything that was going on in this particular trade, and obviously we've chosen an example to teach you from, so I know what the outcome is. This is a point where I would be looking at it from a standpoint of, well, if we break down from here, we're likely to trade all the way across to one of these 2 points. So I would want to have some reference on the chart in terms of some basic profile, so I could figure out where we might be trading down to, and if this was a move lower, would I have enough opportunity to capture something before getting to the edge of the range and potentially locking in the range. We've already seen the tops hold. This is a little outside of where the volume was, and then the other side of that is true as well. If we're going to trade up here, I need to have some reference of where should this be, holding if we're up at the top. So I would do the exact same thing here. Get that decision point and drop it on there, and I can see that there is some volume down below, but there's also volume right up at the top, and that's just going to give me a way to see, if we're holding against this on a move higher, I need to be concerned about a double top. If we are trading through it, then it gives me good sense that I should be focused on the breakout trade. So a lot of people are asking me, well, how do I know when a new high is being made, whether or not it's a breakout or a fake out, so to speak? And really, you have to let the volume tell you that story, and you need a strategy to do it. And so our strategy for this play is, and you're going to see this, I'll just go ahead and spoiler alert here, the market is going to move up and trade into this. As the market's moving up, this is the period that I need to be focused on. So go back and look at the double top video. It's the same thing. I'm looking at the period that is approaching the high. That's what I need to monitor. I need to see how this volume is reacting to this volume. So what I'm going to do is I'm going to go over and I'm going to get our active range tool. This is a range trade. We're trading on the edge of a range, so that's why we've named the tool as we have here. So I'm going to drop an active profile on it, and that's I just need that end period, right? The idea is that if this is the one that I'm breaching then this is the volume that I want to compare to this volume. So as this trades up and into it, you can see right now we're holding against. So let's take the scenario that this ends up being a double top. Okay, so if we were to trade up into this cluster of trade here and hold and trade and then break over and break down, we would be trading off of the volume weighted average price with the edge of value as our stop guidance. Okay, on a breakout trade, or flip this around for a breakdown if this was a trade off the lower end, we're going to do the exact same thing. It's just going to be a long off of the volume weighted average price, and it's going to be our stop is going to be the other side of value, so one tick below the other side of value. So the reason I like this trade so much is because it really doesn't matter whether the market breaks out or provides me with that double top opportunity. Either one of them is perfectly fine because I'm using the same algo, the same execution algo, the same take profit, the same management. I'm using all of the same tools, and I'm using the same point to trade off of. So all I need to do is get that range algo on there, and I'm good to go. Okay, so look how we traded. All we did was trade up into the top of that prior cluster of volume up above. So at this point, it could still be a short. We don't have any indication that there's a breakout. There's no evidence to support that buyers are doing anything more than just holding at the top. So I need to see the market trade through. I need to see an expansion, and I need to see volume start to support the idea that we shouldn't trade back through the prior high. Otherwise, it's very likely to just be a fake out right out of the top. So I'm going to let this develop, and we're going to watch how the structure of the volume that we're profiling that's making the breakout is comparing to the volume of the existing high. Well, note that we've shifted the point of control, right? So now there is, for all of the volume in these two periods, the majority of it is at the absolute high here. So if I'm unable to get on the other side of that and start printing volume higher than that, it's very likely that this is going to be a double top. Right? The whole structure of the volume distribution is changing, and it's becoming top heavy, which is an indication of a breakover if we continue to trade down below it. So at this point in the game, without knowing the outcome, I would be prepared for a double top, where on a move lower, I'm going to short the volume weighted average price. Now I'm drawing the comparison because in real-time trading, you're not going to know which one it's going to be. And so you have to learn these two trades at the same time. Right? You need to be focused on the idea that they're either going to hold and turn around or break out. So even though it's two totally different trades in the way that you would manage it or anything else, or the way that you would approach it, I guess, you're using all the same settings. So it's really just a long buy the VWAP, short sell the VWAP. Okay, so take a quick note now. We've had a little time pass, and the high has breached the high. You can see the structure from the overall chart. It looks like still potentially like it's just three tops, but we've poked our head out of the high just a little bit. This is not enough information to say that this is a breakout. If this period were to close right here and the next one opened up right on the point of control, I would tell you that it's a 50-50 chance still. So we don't have enough evidence to support a breakout at this point. If the market held here, this period closed and a new one opened, and we started down ticking below the point of control, which is also the bulk of volume from the prior period. So because I would like to make this a little easier for you and probably more representative, rather than keeping the profile across these two periods, I want to just bring this one over and give you some base for the structure of just this one period. It'll be more representative of what most highs look like. I would imagine if we go back to this high over here, it'll look relatively the same, even if I include multiple periods. Well, not really. Let's bring one more over. There we go. That's more representative of what a high is going to look like rather than a double distribution like we have here, where we're seeing the point of control down here, but the bulk of volume is really up at the top. The point being that when we are looking at a breakout, the way that we make a decision as to whether or not it is actually looking like a breakout is to compare the volume structure of the move through it compared to the prior volume structure. So we want to see a normal distribution form here. We want to see that the point of control has a strong cluster of trade around it and that we're on the other side. If we get that bell curve of volume here, like we're getting right now, and we trade higher above and start getting a close outside of where the bulk of volume is, so we would be looking for the market to move up and this to be a green profile. Let's just keep it very, very simple for now, right? The reason that we color code the profile is because when you're trading above the value, we want you to visibly see it. In other words, price is breaking away from the bulk of trade, right? So every uptick you're seeing the profile turn green. Well, that means that price is trying to break away from the bulk of volume. And if we can see that the bulk of volume is also at the last point where the sellers were able to hold us, then it indicates a much stronger position for us to see an actual breakout as opposed to what's termed a fake out, where buyers buy through a prior high just to create an inventory opportunity to basically stop everybody out. So you have people who will try and short the prior high and people who are going to be buyers right behind that, looking for the stop outs of the original sellers to provide them with inventory into a position at a better price. Okay, so if you're short here, you have to get out of the position when you get stopped out. What happens if you're short and you get stopped out? You have to buy to close your position. By buying at a higher price, you're providing a seller the opportunity to sell into your buyout, right? So you're providing inventory for somebody as a stop run. Well, we don't want to get stuck in stop runs. So the way that we do that is we use the profile of the probe through. This is a price probe running through the high. And we want it to look like it does right now, where it's green, the volume structure lines up with the prior volume structure. Basically what we've done is we've put a roadblock in the way for the market to trade back down and through this. And that is how we determine whether or not it's a viable breakout. So at this point, it's definitely a viable breakout. And for us to go long at the volume weighted average price makes sense. Look where the VWAP falls. It also falls at the point of control. It falls at this little cluster of trade. And so it's important that we get that by trading up and creating this wall of volume, we now have an opportunity for a breakout. If, for example, all of the volume was up at the top, let's say that the point of control shifted up here and it looked more like this type of profile where it's heavily top weighted, it would indicate that sellers have come in on a hard stop run to stop the upward action and run the stop run back down. Right? The other thing that we don't want to see is the exact opposite of that, where all of the volume in this move is all the way down here, and there's no volume representing the breakout. If that's the case, the odds go down that it's going to hold. Now, we don't know, we can't say that with any sort of absolute, because if the market goes into a fast buying rally, there may not be any volume, and it could just run and never provide us with an opportunity into the market. But if we have this nice normal distribution on the probe through the prior high lining up, then that is our best opportunity for a breakout that we actually get filled on. If the market just runs away, there's nothing that we can do about it. I mean, obviously here it's got a downtick into 2284 just for us to get filled. Right? We can see our working order up here, and it looks like the market's going to run away from us. But remember, we have the volume structure to support us here. So we want to, we want to allow this to play out without trying to chase it up out of the top. Bring this down a little bit. You can see our order keeps changing our take profit order, because one, we haven't been filled yet, so it's a suspended order. But on top of that, look how much our stop is spreading out, right? When we first put this position on, there was the bottom of value was down around here, so it was a very small initial target. Now you can see our initial target, because our target is going to be based on a multiple of what we're risking. We're risking 9 ticks here, so we have an 18 tick target. So you can see our volume structure is still intact here at that prior breakthrough, and here is our volume weighted average price, which when we have a range breakout like this is going to be our ideal position to get into the trade. Now, unfortunately, we've ended up with a relatively large stop, and of course, you can always modify your stop. If you're uncomfortable with taking a stop this large, it would make sense to perhaps get right behind the cluster of trade here and minimize the amount of risk. I'm just going to let this run because I want to show you sort of an unaltered trade, just one that as it plays, how it would come through. So we've now hit the entry price here at 22.88. And you can see our point of control has jumped as well. So we've got trade right there at the entry. There's the entry. At the time that the stop goes in, that ends up being a 6-tick stop. So from 88 down to 82, you can see our first target logging in at 300. Point of control shifts back down to the same volume level that we had to break through. So remember, we're going to follow the probe that's taking us through the high. And we don't know that it's going to trade through the high. Could have been a double top. But once we break through it, we see that the profile that we're running of the probe starts turning green, meaning we're trading above the value area. We start lifting up, making new highs, and we see the volume structure of the probe indicating a clean break and a wall to come back through of the original volume transition. We know we're in for a pretty good indication of a breakout. So we have the market lift back up right off of the point of control, right off of the prior transition. And now we're approaching that first 2-to-1 target up at 300. Bring the chart down just a little bit. We'll see the next order drop as soon as that one is filled. Okay, there's the 2-to-1, and you see the 3-to-1 target go out. My stop also jumps to start trailing the volume weighted average price. The premise behind that is that if we're actually having a breakout, then this swing or this breakout ought to turn into a swing. And we've now hit the 3-to-1 target. There's the 4-to-1 target. I'm going to get this chart into zoom here so you can see. So our range really has become a swing now. And so the fact that we're swinging out of this, we want to use that volume weighted average price as our trailing stop. And you can see we're also starting to break out of the standard deviations here. So we've just hit our 4-to-1, so 4 times. We've made 4 times what we risked on the trade. 5-to-1 is just up above here at 18. And we've hit that and taken it out. So we're now flat on the position. If you wanted to leave a runner on in a trade like this, it would make sense because in this particular instance, we don't have a higher high to work off of. So the market could very easily continue. If you wanted to do that, my suggestion would be to add a CWAP onto it so that you can get a good sense for where we ought to be tracing back into. So in that case, just double click on the profile and add a visible CWAP line. And you can see even here, this would have been a CWAP trade for a swing out. But we were able to capture this at a better point down here to go long on the move as a breakout of a range. And it does look like this is going to continue up for a while. So to review on the trade, you're looking for the market to approach a prior high On the approach, that is the position that you want. That's the probe that you want to start profiling. So in this case, it's this one right here. And when we reach the high, we don't know whether it's going to be a double top or if it's going to be a breakout. So the only way for us to monitor that is to track the volume of the probe through the prior transition and compare that to the volume of the prior transition. Once we're through it, we should see the profile turn green like it is now, because that means that we're breaking away from the volume, we're breaking out, we're breaking away. And once we see that and start to move, we want to trade off of the volume weighted average price and use the bottom of value as our trailing stop until we see the trade develop. In this case, I've got that set to a 2-to-1 target. At 2-to-1, I'm going to start using the volume weighted average price to manage the trade, because it truly becomes a breakout swing, and that would be the best guidance for whether I'm trading with the buyers or if I'm trying to fight the sellers. Hope this has been a great lesson for you. If you want to get a trial of Tradeovate, just hit the link on our page, and we'll get you set up with a 14-day free trial of OFA on Tradeovate.